Hello, this is Ahura. We'll be with you with the global economic outlook in the week ahead, which is going to be the week 44, if I don't mistake, in 2025. As always, let's first check what happened previous week, and then we can talk about the week ahead. We will start the week while the previous week we had very interesting data, starting from the earnings. Earnings, they were amazing, they were good still, and they're one of the reasons that the market's still moving forward. On the other hand, if we can handle, so we're gonna have too many other earnings, including, the most important companies actually they are listed there to be present. Their earnings, including Visa, United Health, Extra Energy, um, then on Tuesday, and then from Wednesday, actually, we're going to have the most important earnings, including the Microsoft, including the Meta platforms, Google, and they're the most important companies, the Boeing as well. They're going to publish their earnings, and generally the markets are positive about these earnings. However, on the out of the calendar and out of the data, I should mention that geopolitical tensions are still continuing. Geopolitical tensions are still there, and the concerns are really high. The market is about 19 for the weeks. This is while we have to say that the government shutdown in the United States still continues, and there is no light at the end of the tunnel. We don't know what's going on here, and there is no exact date or the sign that they are ending their scandal. Anyway, in the economic calendar, Monday started with the People Bank of China's policy meeting, and they hold the rates at 3 and 3.5% for the 1 in 5 years loan prime rate, as it was expected. This is while the other economic data from the China, including the labor market data and other data we had from China, they were positive. They were generally positive, and they're putting the idea in the mind that the Chinese economy is getting slightly better at the beginning of fourth quarter. Later during the week, the most important data was the inflation numbers from Canada, for example. We saw that the Canadian inflation slightly increased, while on the other hand, in United Kingdom, inflation increased much less than expected. The headline inflation stayed unchanged at 3.8%, while the core inflation slightly eased, and that generally shows that we can say that the British inflation is somehow under control, while the central bank in United Kingdom was expecting inflation around 4% for the September, but it didn't increase to the 4% yet. We saw that it was unchanged at 3.8%. Later, from United Kingdom, we had other data as well, like retail sales and PMI numbers. They were better than expected. Generally, the PMI numbers from other economies also, they were fine. Either they were better than expected, they increased from previous month. Later, but the most important number that during the week we were waiting for, published on Friday, it was the US inflation numbers. The data which published by delay because of the US government shutdown, as you know. The inflation was softer than expected. The headline inflation increased to only 3%, while market was expecting 3.1%. However, it increased to 3%. The core inflation also with 0.3% monthly increase, with 0.2% monthly increase, which is the lowest in the past 3 months. Increased to slower to 3% from previous 3.8, 3.1%, while market was expecting to see exact the same number for September as well. Week ahead is going to be the central banks meetings. While we have so many other data to watch, but they have to mention that the market focus will turn towards towards the central bank's data. Monday, we're going to have the very light day with mostly U.S. Durable goods orders and new home sales. Generally, the home sales, existing home sales, previous week showed 1.5% growth, and new home sales also expected to show the same progress during the week, the next week as well. Generally, we are positive about the data, while the durable goods orders also should be slightly better than expected. They're better than previous months. Tuesday is not going to be a hard day. The most important number is going to be gained from the United States with the CB consumer confidence, while from the Wednesday, exact day that we have the giants reports, we're going to have the central banks meetings as well. Canadian central bank going to publish its interest rates and monetary policy, which is expected to hold at 2.5%. Canadian inflation slightly increased, while the while the economic data are not so bad. That means that the central bank can hold at the same policy at the same rate until they will have more the more signs that okay, it's the time to cut the rates. For now, we expect to see the central bank in Canada, or Bank of Canada, BoC, to hold the current rate at 2.5% and no change in monetary policies. Few hours later, we're going to have the U.S. Central Bank or Federal Reserve meeting, FOMC monetary policy meeting and interest rate decision, which is expected to see the central banks to cut the rates by 25 basis points. Generally, the market is expecting to see the interest rate at 4%. This is somehow this is very expected, and this is something that it's already priced in the market with more than 98%. But on the other hand, we can see that the inflation, yeah, it was softer than expected, but still 3% is way above the central bank target. And the U.S. economy is moving fine compared with the other economies. It moves fine. That means that if the central bank cut the rates, maybe it can, like, at the very short effect in the market, can support the market, especially the tech companies. But generally, it can increase the inflation again. It can cause the inflation increase. And on the other hand, with the higher interest rate, with the lower interest rate, comparing with the economic concerns in the United States, we can expect lower money flow towards the U.S. economy and less affected income. Like the general income, the money flow in the country, and it can affect negatively the U.S. economy. So that's why I don't think that's going to be a nice reaction to the current position, but market is already pricing that in more than 98%. That's scary. That's really scary. I don't think that's something that should help the U.S. economy. But anyway, it's going to happen, and the market's already expecting that. Later on Thursday, we're going to have again 2 other central bank meetings, Bank of Japan at the beginning of the day, and we are expecting to see no change, same as the Bank of Canada. The new government in Japan, with the new Prime Minister, Ms. Takeshi, she is the support. She's supporting the kind of economy which is mostly supportive economy. You know what I mean? Just like she says that for now, the Japanese economy need more support and need more help. I don't think that the central bank right now is going to do anything against her idea and increase the rate. That's why we can probably see the Central Bank of Japan, or BoJ, to hold the rates at 0.5% at the current level. Later, a few hours later, we're going to have the central bank meeting in Eurozone. While we have so many other data from European economies, GDP numbers, and so on, and even from the Eurozone, we're going to have the unemployment rate as well, the GDP as well. Unemployment rate also expected to stay unchanged at 6.3%. But anyway, the central bank of European Central Bank is expected to also hold the rates at 2%, deposit rates, the facility deposit rate, or we can say the main rate. The central bank in Europe also sees that the inflation is recently started to increasing slightly from 2%, from 1.7% to 1.9%, and then now we can see the inflation around 2.3%. That means that the central bank probably going to be more cautious, and we don't probably see any rate cut. Till like last month, we were expecting another 25 basis point rate cut in 2025. But with this condition, with ongoing things, or generally the economic changes that we can see in the Eurozone, I don't think that the central bank in Europe going to cut the rates anyhow, just like in 2025, not in this month, and not in December. As mentioned, during the week, we're going to have too many other data, including the PMI numbers, manufacturing PMI from different economies, inflation numbers. The Eurozone inflation also the day after the central bank meeting going to publish, and we expect to see the core inflation again around 2.4% and headline around 2.2 or 2.3%. If the government shutdown finish, we could probably just like end in the United States. We're gonna have the core PC price index and PC GDP numbers as well. On Thursday, we're gonna have the third quarter, and then on Friday, we're gonna have the personal income and spending numbers. For the energy market, I have to mention that the US Baker Hughes data last week showed that the overall and just like Baker Hughes and just like total, the oil and total actually for oil and gas recounts increased by more than increased to 200, 450 or 400, something like that. Yeah, the total rate increased to 550 and the oil rate counts increased to 420 by 2 more. That shows that the energy market for now cannot take advantage of this condition. With this, looking at this data, and considering with these numbers and expected data, let's see what we can have in the charts. Let me share my charts. Okay, let's check the charts. This is a week's chart. As you can see here, the market risk is still high at 18.60. That means that generally the market's still counting on, it's like, I mean, they don't count actually. Let's better say in this way, that the market still doesn't count on any solving of any of the ongoing geopolitical tensions and other problems. The market risk is still high. With the higher risk in the dollar index chart, we can see here after softer inflation, the dollar index slightly eased to 98. But again, when you are looking at the real data, we can see that the inflation at 3%, and the 3% annually, and core inflation also at 3%. That shows that the market is this inflation is still, despite just like softer data, softer than expected, but still it's way above the central bank target. So that's why the market faced with the more reality, and the dollar index again increased towards 98.70, the same level before data published. This stronger, almost a stronger US dollar and softer, slightly easing the market risk. As you can see that as you saw that the market risk was around above 24 previous week and increased slightly east to 18, and also profit taking, all of them, they helped the gold to see one of the biggest fall last week from 4,380 towards 4,000. And now the rest of the week it increased, traded between 4,100 and 4,150. Generally, we can say that the gold is still, in the bigger picture, is still positive side movement with the positive tendency. On the energy market, US inventories eased while the market was expecting increasing the inventories with the opening of refineries. The US inventories fell. That supported the oil price, while on the other side, the US new sanctions against the Russian oil companies also increased the market concerns. So it increased generally the oil price by about 6% last week. But generally, we can say that the market doesn't count on the higher prices, as there is an unbalance between the supply and demand. On the other market, S&P 500, Nasdaq, and Dow Jones. Looking at the stock markets, we can say with the softer inflation and the positive earnings that we had, and the overall expectation of the rates cut, all of them, they supported each other they supported the stock market to see the higher levels and the higher numbers. But it's not something that we can rely on in the market. It cannot rely too much on that. And most probably we can see the negative impact of this data. But let's say maybe just like continuing of this week also, we have some positive data, expected data, and also the central bank meeting. It can also support the stock markets. So for this week, still we are counting on the side movement with the positive tendency, but we have to wait until end of the earnings, and then we can probably see the real market direction. For now, we are still positive, side movement, and a positive for the stock market. But the cryptocurrency markets also, after falling towards 104,000 last week, the crypto market slightly increased, but still it is trading under a 113,000 K level. As long as the Bitcoin is trading under 113,000, which is the 50 exponential moving average as well in a daily chart, we can say that the market is negative. Any uptrend supposed to start about 118,000 K technical levels here, and between 113 and 118, we can count on a side movement. Yeah, that was the market and our expectation. Don't forget to focus mostly on the central banks. You can read the just like more data about this, like written version of the economic outlook also, the weekly outlook also in the website. Don't forget to check the website for more data. Have a good time. Bye bye.